Welcome to County Portal, your simple source for local government services and public records. Let's get started.
Does the IRS really destroy your tax records after 7 years? It's a question a lot of people ask, and it's based on a common myth that could get you into serious trouble. The idea of a 7-year rule for keeping documents is a decent general guideline for business, but when it comes to the IRS, the reality is a bit more complicated and much more important to understand. The amount of time the IRS has to audit you, and therefore how long you absolutely need to keep your records, is based on something called the statute of limitations. Let's break down the 3 main time limits you really need to know. First, there's the 3-year rule. For a typical, honest tax return, the IRS has 3 years from the date you filed to initiate an audit. So, if you filed your 2023 taxes on April 15, 2024, you should keep those records at least until April 15, 2027. This covers the vast majority of taxpayers and is the baseline for record keeping. Second, there's the 6-year rule. This kicks in if you've substantially understated your income. If you fail to report more than 25% of your gross income, the IRS gets 6 years to come back and audit you. This is a big reason to be careful and report all your income, from your main job to your side hustle, because a significant omission doubles the time they have to look into your finances. And third, there's the scary one, the no-limit rule. If you file a fraudulent return, or if you don't file a return at all, there is no time limit. The IRS can audit you and assess taxes, penalties, and interest at any point in the future, whether it's 10, 20, or 30 years from now. So, back to the main question. Does the IRS destroy its records? The answer is generally no. While the time limit for them to audit you might expire, the IRS keeps a record of your tax return information, called a transcript, for a very long time, often indefinitely. They have a massive database with your filing history. The rules we just discussed are about their window to take action, not about them hitting a delete button on your file. The burden of proof is on you. If they ask questions, you need your documents to back up your claims. This is why it's so important to keep your own records. You need to hold onto your W-2s, 1099s, receipts for deductions like charity or business expenses, bank statements, and a copy of the tax return itself. Keeping digital scans in a cloud folder is a great, space-saving way to do this. You'll need these documents to defend yourself in an audit, to amend a past return if you find a mistake, or even for things like applying for a mortgage or Social Security benefits. So to sum it all up, forget the simple 7-year myth. Think 3 years for a normal return, 6 years if you made a major income error, and forever if you commit fraud or don't file. The IRS keeps its data, so you need to keep your proof. Thanks so much for watching. We hope this cleared things up. If you found this video helpful and want more straightforward answers to your money and tax questions, please hit that subscribe button and turn on notifications. We'll see you in the next video.